Hi there, this is Alvin from Dr. Well. Today I'm going to talk about Manchester United, my favorite team. As you can see, I'm wearing the jersey that they last won a major trophy. That's the Europa League 5 years ago. It's been a drought ever since. Performance have been dreadful. Fans have been disappointed year in, year out. And recently, the CEO, Richard Arnold, his dialogue with the fans were being recorded without his knowing. And he did sound very bearish about the situation in Manchester United, and he did say that, or remark that they have burned through the cash. So I was curious to really know how bad the situation is, because this is the last thing that the fans want to hear. If you run out of money, that means that the ability to buy new players, better players, will diminish, and then the chances of winning more silverware is going to be hard to come by. So I was curious, and I thought that this would be a good learning opportunity for football fans as well, and how to interpret financial statements. And first of all, Manchester United is a listed company. Right? It's listed in US in 2012, and that means it's about 10 years of trading history. The share price has not gone anywhere. It's IPO'd at $14, now it's $10.85, right? Even with dividends over the years, I don't think it's enough to cover the capital loss, right? So that is the situation. And the good thing about being a listed company is that their financial statements are published. So investors like me can pour through their statements and get the information and make an assessment how their financial status are, right? But first of all, I'm not a Manchester United shareholder. I am a fan, but when I look at the finances, it's really bad, probably as bad as their performance on the pitch. So let's go through some of these details, right? The number one thing that I realized is that they have accumulated losses. So let me just zoom it in for you to see. In the past 5 years, between 2017 to 2021, these 5 years, out of those 5 years, 3 years have been loss making. 2018 they lost 38 million pounds, 2020 they lost 23 million pounds, and 2021 they lost the most at 92 million pounds. So it is understandable in 2020 and 2021 because of COVID, right? The fans couldn't go to the stadium, buy the tickets, and support their teams because they are just not allowed to be there, right? They can only watch on over the TV, and yes, they can buy some merchandises, but the match day revenue is a very significant chunk of it. So it is okay that we see losses in those years. But if we fast forward to today, and the final year 2022 results has not been released yet at the time of recording, but we do have the first 9 months of 2022 FY, and they continue to make losses even though the fans have returned to the stadiums, right? And they still make a 45 million pounds loss in the first 9 months of the new FY. Okay, so it is not looking good, right? They have not been making profits. And then the next thing is that something that's more stuck or more problematic is that they are, over the last 10 years, they actually have not made money overall. Okay, as you can see, I highlight there, they have accumulated losses. It's a negative number. Instead of retained earnings, they have accumulated losses. So past 10 years, they have lost money overall. That is not a very good sign, right? I'm definitely not I'm not going to buy the shares looking at this situation. Okay, so that's the first point. And the second point is that they also have they don't have enough sufficient working capital. What do I mean by that? So working capital is where you compare the current assets with the current liabilities. And in accounting terms, current means less than a year. So current assets means they are pretty liquid assets that you probably foresee able to liquidate or able to receive that money within a year. And current liabilities means that these are debts or payables that are due within a year that you need to pay somebody. Okay, so you do want the current assets to be more than the current liabilities, right? So the difference is what we call the working capital, right? But for Manchester United, yeah, I'll zoom in again. You can see that they actually have less current assets than current liabilities, or in other words, more current liabilities than current assets as of 3Q 2022. That is not a good sign, right? In fact, it's almost double. Okay, no, actually, it's more than double, right? The current liability is more than double current assets. And how will Manchester United make up the shortfall? The only way to do it is to borrow money, right, or reduce the liabilities. You can see their current liabilities, majority of it comes from besides the payables, right, come from the deferred revenue, right? And that those are the player salaries, all right, that they have contracted. Okay, the contract liabilities, right? So they have contracted them, and they are supposed to pay them the salaries in months to come, and this is due within the year. So high salaries will increase these current liabilities. And then the other big proportion is the borrowings. Right? Borrowings are debts. So they borrow from the bank or borrow from bondholders, whichever. Okay, so the borrowings are also due within the year. And you can see they do not have enough current assets to pay out this amount. And it is very likely that Manchester United will have to borrow more money to sustain their operations, right? To sustain their working capital. Okay, so that is a very another bad thing that has happened in Manchester United finances. All right, and then the third thing is that they have been borrowing, and that's why their debt has been climbing, and it has gone up to a level that I think it is risky, right, from a investor perspective. Okay, so let's use the debt to equity as a measurement. Okay, so the total borrowings or the debt instrument that they have accumulated is 592 million pounds. That's that's more than £500 million. Okay, that's a significant amount of borrowings, and their equity, right, is just 211 million, and it doesn't help because they have accumulated losses. So this equity is actually declining at the same time. So if you have a debt which is the numerator that is going up, and then you have the equity that's shrinking because you are making losses, their debt to equity has ballooned to 281%. And it was just less than 200% last year in the last FY, but this FY has ballooned to 281%. This is considered very high debt. Okay, to give you some comparison, relatively, less than 50% is considered low debt. Right, this is like 281%. That's very high debt for a non-finance company. Okay, so the debt level, I think, is also a very unsustainable stage. I think they need to deal with this debt. They need to pare it down one way or another eventually. Okay, and they also have cash flow problem, right? Coupled with all the debt issue losses that we have covered so far, the cash flow issues is showing up as well, right? Last year they did have positive free cash flow, but as of the first 9 months of this FY 2022, they actually have a negative free cash flow. That's not a good sign, right? And where did the money, all the cash go through? So they do have positive operating cash flow of about 50 million pounds, right? And they bought players like last season. We have Ronaldo, we have Sancho, we was a big chunk of 70 over million pounds, right? And Varane from Real Madrid. So altogether, they recorded about 100 million pounds in this FY, right? FY 2022. Okay. And they bought these players at the start of the season. So it's still considered within this FY. And they did sell some players like Daniel James, but it also is only 20 over million pounds. Okay. So they didn't really recoup the deficit, right? The amount of money that's flowing out to buy these players is a lot more than the players' revenue that they got from selling them, right? So you can also see that they borrowed another $40 million, 40 million pounds, just to sustain the cash flow. Okay, and their free cash flow, if you take the operating cash flow minus this capital expenditure, right? Because I do see this investment in players or this buying of these players as a capital outlay, right? Because they buy them and then they use them for the next few seasons. So it is a long-lived asset, so-called, right? So I treat them as capex. If that's the case, they actually have a negative free cash flow. Okay, so cash flow is not looking good as well, right? So there are many reasons to worry about Manchester United finances, and I think Richard Arnold has a very tall order to get the finances in order, not just the performances on the pitch. And this is the last point I want to make, right? So they do have substantial asset and intangible assets actually. Right? 59% of their total assets are in intangible assets. So what are these intangible assets? So if we take a look deeper into what these intangible assets are, is broken down into two main parts. The first is the goodwill. This is the excess payment that was made when the owners acquire Manchester United, right? The club. So they recorded about 421 million pounds in the goodwill. Okay, so you can treat this as a branding, which logically speaking, Manchester United do have the branding, and it's a they even today, after they have not have any silverware for a long time, they still have a good standing, right? Just that they haven't lived up to the expectation, but the brand power is still there. Okay, and then the second big component is the players registration, right? So they do capitalize the players contract value as well as the amount that they acquire these players, and it's about 350 million pounds. Okay, why would I say these asset value are shaky, right? First of all, the goodwill is very iffy, right? There isn't a amortization schedule, so they just keep carrying this amount of goodwill forward. Okay, let's think about this. If let's say Manchester United for the next 10 years, they stop really winning anything and they continue to disappoint more fans, right? Eventually the fan base, I think, will not be as strong. The branding will erode essentially, and that means that this goodwill may not retain its 421 million pounds. Right? It may have to be impaired eventually. So it is very uncertain, right? And then the second thing, the registration of these players, this is the current team, right? A 350 million pounds team. I'm not sure whether this is the true market value. If let's say Manchester United want to sell these players, can they really recoup this amount of money? I doubt so. Actually, their track record has not been good. They have always paid a lot more for a player, and then they always sell them at a much cheaper price than they have paid for. So it is very hard to recoup that kind of a value. And some of them, I think that in a lot of cases, they know that the players are not going to be played or not going to be fielded quite often, right? But they still continue their contract, they still extend the contract. That I suspect is because they want to retain that intangible value within the club. Okay, so it is a little bit more for the finances rather than for the playing of the game. Okay, so I also disagree with that, right? It's better that they just take that loss and move on and build a better team from there. Okay, so this is also a very big iffy thing, right? And that means that a lot of the loans is built on these intangible assets, okay, and which is on very uncertain asset value. And if any amortization, any impairment on this asset value will cause the debt level to go up even more, right? So that's another risk that we're talking about here. So, in a nutshell, I'm really not very positive about Manchester United finances. I think it is really looking bad, and Richard Arnold need to fix it. Okay, so it is trouble with high debt. Their debt to equity is over 200%. They have a poor cash flow. Their free cash flow is negative, and then they led to more borrowing. So it becomes a vicious cycle, right? Because they don't make enough money, they borrow more money, they service more debt, more cash outflow, more debt burden, and then they have to end up borrowing again. So it is a vicious cycle that Richard Arnold need to break this for Manchester United. And with better finances, hopefully they can afford better players. And I do think that they really need to buy proper players and give them maybe you don't need to buy the best players out there. It's time to make use of the more of the youth academy profile more, so they can buy low and sell high some of these players. Like how Dortmund does it. They really make a lot of money by buying young players and sell them at very high prices to other clubs. So they need some of this engine to go on, right? And it's currently just relying on the good faith of the fans and the branding. But this is something that if you don't bring in the silverware, eventually this fan base will shrink, right? So that's not a good news when your finances are already in a very shitty position. So they need to start winning players, winning trophies. They need to start making money by selling players at much higher prices, and that requires them to perform, right? Otherwise, if they're underperforming, why would other clubs want to pay high prices to acquire these players? Okay, so that is my take on Manchester United. It is not really in a good shape. As a fan, I hope they really win some trophies and get the finances right at the end of the day, right? So there is some change, some new manager, new CEO. Let's see how they perform from here. Okay, so that's all I have to share. Remember to like this video and subscribe to the channel, and we can learn more things and interesting things like pouring through financial reports, financial statements. I hope you learn a thing or here, and we will cover more things in the future, right? So be sure to stay around in this channel, and I'll see you around. Goodbye.